Roblox Corporation, RBLX, in San Mateo, California, is one of the leading online entertainment platforms for consumers aged under 18. The company made its stock market debut via a direct listing on March 10, 2021, and its shares have gained 47.3% since. However, the stock has declined 17.9% in price over the past month to close its last trading session at $102.40. The stock slipped 9% last week after the company reported a decline in its daily active users in October after a massive outage on Halloween weekend. Furthermore, RBLX's near-term prospects look bleak because schools have reopened, and children are spending less time at home. Here is what could influence RBLX's performance in the coming months. Industry headwinds. Following its crackdown on the IT and education sectors, China announced in August that children and teenagers would be allowed to play online video games for no more than 3 hours per week. Because RBLX has significant operations in China and its services are primarily focused on minors under the age of 18, this move is anticipated to affect the company's revenue. Debt refinancing. In October, RBLX announced its plan to offer $1 billion of senior unsecured notes through an offering to qualified institutional buyers under Rule 144A of the Securities Act of 1933 and non-U.S. persons outside the United States under Regulation S of the Securities Act. The company intends to use the offering's net proceeds for general company objectives, such as production and development, capital expenditures, investments, working capital, and future acquisitions and strategic transactions. Top-line growth does not translate into bottom-line improvement. RBLX's revenue surged 102.2% year-over-year to $509.34 million for the third quarter, ended September 30, 2021. The company's average daily active users, DAUs, increased 31% year-over-year to 47.3 million. However, its loss from operations grew 50.3% from its year-ago value of $77.45 million. And its net loss surged 52.2% from the prior year quarter to $74 million, while its loss per share came in at 13 cents versus 26 cents in the year-ago period. Weak profitability. RBLX's 20.8% trailing 12 months gross profit margin is 59.7% lower than the 51.7% industry average. Also, its ROC, net income margin, and ROA are negative 49.1%, 24.5%, and 12.5%, respectively. Furthermore, its trailing 12 months EBITDA margin stood at a negative 17.6% compared to the 21.9% industry average. Premium valuations. In terms of forward price/book, the stock is currently trading at 105.57x, which is 3,872.2% higher than the 266x industry average. Also, its 21.04x forward EV/sales multiple is 740.9% higher than the 2.50x industry average. Furthermore, RBLX's 21.65x forward price/sales is 1,149.8% higher than the 1.73x industry average. Ratings reflect uncertainty. RBLX has an overall D rating, which equates to sell in our rating system. RBLX has a D grade for value. The company's higher than industry valuations are consistent with the value grade. The stock also has a C for growth and quality. RBLX's poor financials and weak profitability are in sync with these grades. Of the 24 stocks in the C-rated entertainment, toys and video games industry, RBLX is ranked number 20. Bottom line. RBLX's shares have declined considerably in price, with a declining user base over the past month. Moreover, analysts expect its EPS to decline 27.3% for the quarter ending December 31, 2021, and 81.3% this year. So, given the company's negative profitability and lofty valuation, we think the stock is best avoided now. Thank you for watching this video, we appreciate your continued support. For more daily news, please subscribe to our channel. This is Economics Empire and we'll see you in the next one.